Good afternoon. My name is Michitsch. I am an accountant based here in New York City with the middle market focused firm Bekaert. Before that, I actually was on the operational side. I was a CFO of a mining startup. So everything that kind of comes into the formation of your financial statements, again, I bring that operational experience to our clients. And here we're all talking about the importance of data. I think it's a game changer, and I think we all can agree that the availability of on-chain data has absolutely, especially from my perspective, unlocked a lot of opportunity. However, one of the first questions I always ask myself, coming from an audit readiness perspective, how clean, how reliable, what am I actually looking at? So here I would love to kind of explore how high-quality on-chain data is not just a tool, but also unlocks a lot of value in terms of our industry, right? Is that driving innovation? Is that managing risk on a certain perspective? And even generating some alpha opportunities. So I'd love to just kind of start understanding what we're talking about. What is on-chain data and how, I guess, respectively, you and your firms are using it to unlock and extract some of this value. But maybe before we start into that question, let's get a little background of who you guys are and where your intersection of on-chain data kind of operates in your day-to-day. So Niamh?
Hi everyone, delighted to be here. I effectively lead sales at Prove AI. We are formerly known as Casper Labs. And ultimately what we do is we help companies ensure that they can manage, govern, and audit the underlying AI systems and the data with that. And everything essentially is anchored to the distributed technology known as the Hedera network.
Hello, everyone. My name is Chris Solarz. I'm the CIO of Amitis Capital's digital assets arm. We are a family office that's based in London that invests across all active management strategies in digital assets. So that's venture capital, liquid directional, and liquid market neutral. I've been an allocator for over 20 years, mostly to hedge funds. I moved full-time into digital assets 2 years ago, and I've now met over 500 digital asset funds. And probably the most interesting thing relevant to this panel is that digital assets obviously has such a big benefit for an allocator like me to look at on-chain metrics. For venture, we look at KPIs. For liquid directional, we can also look at various KPIs. And for the arbitrage strategies, it's where the most exciting use of on-chain data is.
Hi everyone, Shlepakov from Coinbase. Thanks for having me. I've been at the firm for a little over 3 years. I lead our private wealth segment within our institutional side, so helping family offices, high net worth individuals, and private clients have tailored strategies with our institutional products. Thank you.
Hi, Thomas Bailey here, founder of Road Capital, exclusively focused on blockchains. I think of us as liquid venture capital. It's sort of a combination of my money, Stan Druckenmiller, Alan Howard. We raised a little bit more than $200 million in Jan 22. I've been investing in the space since 2015. Previous to that, worked at a hedge fund called Perry Capital here in New York City, investing in distressed government bonds and distressed financials.
Thanks so much. So I guess circling back to my opening question, what are we talking about here? What is reliable data, and how are each of you guys extracting this potential value?
Yeah, I'm happy to go first. So I suppose reliable data, it's really about understanding its essence, and I know that was talked a lot about on several of the panels earlier. So understanding the origin, how it is handled, what is in fact relevant for your business today, which is a very big challenge right now, particularly as it pertains to generative AI and AI, because now we have to think about unstructured data. And then also as part of that, it's how do I ensure the verifiability, authenticity of the data? How can I trust that data? And so what we're effectively doing is bringing that assurance to these businesses. So they have this one single tool where they're able to register, track the data sets, how the models have changed, and better understand the outputs effectively as well, because all of this is tracked on a tamper-resistant technology. all the way back to the source. So yeah, that's what we do.
So I've spent my whole career interviewing managers and understanding their edge in fundamental analysis. And so with the advent of on-chain data, it really opens up almost a real-time use case for a lot of this data. So by looking at on-chain data, for example, we can have real-time information on earnings, active users, transaction flows, liquidity, et cetera. I think in traditional equity markets, we typically have to wait until quarterly earnings and prices are automatically reflected on the instantaneous introduction of this data. But now with on-chain data, we're able to get this in real time, which is really, really exciting and interesting, especially for managers in the space. Another thing we have is access to flow information. And normally this would be only the only groups that really have the insights are the big prop desks, like the Susquehannas and Citadel Securities and all of the investment banks that are doing this kind of prop trading. But if we know how to harness the on-chain data, everyone has access to that. We've kind of commoditized that in a really open way. And imagine like having this full understanding of the health of any network. Imagine if we had had it in 2008, for example, if we'd had real-time indicators of banks, of their mortgage-backed securities, of their CDOs, and understanding LTVs in real-time basis. So this is the promise of DeFi. And my expertise is looking at managers and understanding how they're building their portfolios using this data. But this is really the future of the financial markets, having this real-time on-chain data.
No, that's all great stuff. And one quick scheduling change. Rob from Luca wasn't able to be here, but I really, again, as a CPA, value his position in terms of touching and accessing this data. Again, he and the product is kind of one of those starting points for putting this together. But Chris, I do want to pick on the point that you mentioned about the availability, the real time. As soon as the transaction closes, we all can drop into all the public explorers there and see exactly when it, what type of information transpired. But I guess more broadly, are there other types of availabilities or kind of innovative use cases that we're using in doing this data now that we have it pretty much instantaneously that's helping drive some of kind of your strategies or Thomas, something that maybe you've been integrating into your strategies as well?
Yeah, happy to talk a little bit about this. I mean, I think maybe just to sort of back up, I don't know if we're at the point where the data is so clean that we can really effectively use it. There are some, I think it sort of gives you some qualitative sense of what's going on. Is this a lending pool with $100 million, but it's only coming from 3 accounts and the other ones are, every one is $1 being done every 10 minutes and it's actually being done by a bot. These are things that if you study the on-chain data, you might get a sense of whether a pool or a protocol is actually sort of widely distributed or not distributed. So I think, the place that we're at, we're sort of investing in places like Artemis that are sort of trying to develop a Bloomberg-like tool for crypto. And I think that almost the best way to do that is have contributions from CPAs and tax accountants, as well as protocols themselves who sort of want particular data tracked about themselves. So it's almost this end-sided network that contributes into a pool that helps to standardize financial metrics around different protocols, because a protocol can't issue a 10K, it can't issue a 10Q, it can't issue a debt statement, right? But so I think that there are going to be some interesting firms that sort of help to tie all this data together and then also sort of understand what is sort of real transactions from fake botted transactions, because I think we're going to see that increasingly on chain.
Yeah, I think you hit on a really good point of just understanding and mapping out the headwinds that we're currently facing, right? Sources of truth, pointing to the right gospel. Again, that's part of my essence of when I'm putting financial statements together. How comfort and reliable am I, let alone an auditor, especially when it falls into the 10K and 10Qs. But I guess before we can kind of use it, we talked a little bit about where it lives. How are firms or maybe your strategies actually getting their hands around it? How are we harnessing this? And I guess maybe a step further back, is this the right path to continue to kind of poke around? Is reliable data the key to make all of this ecosystem continue to grow, or is there an alternative that really we should be looking at and prioritizing as well?
I can jump in. So Coinbase really prides itself on being the most trusted brand in crypto, and that's a mandate we take to heart in every product, application, policy. And reliable data is at the core of that, right? Like there's many reasons why reliable data is at the center of this industry growth. From my seat, I think institutional adoption is huge. As you both have mentioned, institutional investors, accredited investors need reliable data to assess risk, to assess investment opportunities. And once they're comfortable because of the reliable data, we see the large scale investments that we need to see the industry grow. As well as product development. So our developers are using the reliable data to create all of these new products, whether it's tokenization, smart contracts, stable coins, all of this. Reliable data is at the center of all of those products, which is just going to grow and broaden adoption as well. And then verification, being able to audit all the data on chain, as Chris mentioned, and it's real time. Anyone and everyone can see the data. So I think it's definitely a big part of the growth.
Yeah, I definitely agree as well. Like from our standpoint, and if you think about it, like the companies that are going to be surviving in the long run are going to be able to use their data as their point of differentiation. When you look at AI, like 90% of what AI is, it's all about your data. And so you really need to be able to understand how you can use that, again, in the context of your structured and unstructured data. And like right now, what we're kind of seeing in the market just generally is that companies are only using 5% of their data to make decisions. And if you think about it, data goes absolute like that. So again, having flexible systems where you're able to determine what is actually relevant, that is going to be your fuel and your competitive advantage ahead of your competitors, and also to just survive in terms of business longevity.
And Niamh, I'm glad that you brought up AI and technology, because I'm really interested and curious to understand, what do we think the role of AI or technology is kind of maintaining and having its play with, again, going back to the reliability, the trust, the security, accuracy at the end of the day. Where do you see that kind of symbiotic relationship start to play out?
Yeah, well, I definitely think like blockchain is a really good tool and an enabler for any type of system where there is a lack of trust. So with AI, typically they are black box systems. And so using that as a track and trace layer essentially is really, really powerful, particularly when AI is essentially multi-party in nature. You have the model builders, you have the model consumers that are using these models, you have the auditor, you have the regulator. Everyone needs to be able to access it to a certain degree. So with blockchain, you can have really tight access controls around that and revoke access to certain data sets, etc. So I'm excited to kind of see how this is going to continue to evolve, because it really is helping remove that black box and bring trust and integrity to these underlying systems. And that is needed, when you look at the upcoming regulation as well.
No, excellent point. I think there's tiers of macro movements that we all have to kind of be lockstep in together, but then on the micro scale as well. I mean, maybe Chris and Thomas, specifically, as you guys kind of enact your strategies, are there any specific processes to help you guys get comfortable, or maybe your risk managers get comfortable in the reliance, the accuracy of the data that you're using? Any special, again, steps that you're taking to, again, get the whole team comfortable with what you're doing?
Well, I think perhaps I have two very good examples of how on-chain data is far superior to traditional data that we've been collecting. A lot of the quant strategies that I'm evaluating, and remember, they're trying to make money in various different ways, but sometimes through prediction. They can see from on-chain transactions that a large order is being transferred into an exchange. And this is a bearish signal, because if someone is transferring onto Coinbase, millions of dollars worth of Bitcoin or Dogecoin or anything, they're probably going to sell it. So it's a predictive signal to say, hey, we probably want to be ahead of that. The reverse is also true. If they're transferring it off-chain, it's a bullish signal. They're probably putting it into cold storage, and it probably wouldn't be as strong of a signal as the immediate sell because it doesn't have the same market impact. But I think that's quite interesting that we can't see these flows, right, in traditional data. The second one is a derivative of market capitalization. It's called realized capitalization, and it's something that we don't have in traditional markets. It's effectively the cost basis of every Bitcoin that has been bought. So right now, when we look at the market cap of Bitcoin, it's somewhere around 1.4 trillion. But if we look at everyone's cost basis, it's less than that right now. And the wider that gets, it means more and more people are in the money, which also means more and more likely that they'll sell. And if it ever flips, they probably will hold it on because people have this psychological disposition to hold, to sell at a profit. So this is a metric that we can glean from this data and many others as well that a lot of managers are now using as alpha indicators for ways to, to buy and sell and to make small profits.
Yeah, I have sort of a longer term sort of investment philosophy around holding a couple tokens from a couple chains for a long period of time and studying them for a year or year and a half, and then putting on a position. And I think some of our advantage is really time arbitrage. A lot of people are thinking in 6-month increments, and I want to think in 6-year increments. And so I want to study these things super deeply. And so I'm really focused on working with firms like Artemis to get the most reliable data, like sort of fundamental data that I possibly can, and what is the right fundamental data. How many of these accounts are actually bots, how many are not bots, how much is staked, how much GPUs is committed to this AI sort of crypto network. I'm trying to kind of understand those questions at a very deep level, and working also with the protocol teams and the foundations to make sure that they're providing reliable, good data, and then working with groups that are sort of independent, that are looking across protocols to make sure it's apples to apples when you're comparing stablecoins on Solana. How does that equal stablecoins on ETH? These things are really important. And then lastly, I think, how do people try to game the metrics, right? Are these sort of are the growths in, say, lending pool? Is it a function of incentive fees? How much incentive fees are being handed out? When do those incentive fees roll off? When do the lockups end? These are all things that I think really are helpful for sort of a fundamental, deep value sort of investor, to get comfortable holding an asset for a long time.
And one point that Thomas makes, I think, is really important. There is so much data, we're like overwhelmed with data, and we need groups like Artemis, and there's a few other leaders, and some of the prop groups are doing it proprietarily as well. Like they don't want to share their edge in cleaning and scraping all this data. But the fact that we have real-time data for every exchange, every single tick data, perhaps is almost too much information. Like, what do we do with all of that in a lot of ways? I have a funny parallel in real life because I'm obsessed with my own health metrics, and I wear an Oura ring. At one point, I was wearing the Whoop, and my wife, who's a doctor, who knows a lot more about this than me, would always joke with me, like, what are you doing with that information? And I say, well, the HRV is the first derivative of heart rate. And she's like, yeah, how do you feel? Do you feel good? Do you want to go out for your workout or not? And like, what do we actually do with this data is like the number one point, but we're not at the point when it's clear like what all the metrics are and what we need to monitor to have a healthy ecosystem, right? We're still developing, which is why there's such a great opportunity from my seat in quant funds, in strategies, because alpha is very, very wide. Spreads are very wide because people are still figuring this out. I think if we come back in 10 years, we'll have metrics that we kind of all collectively agree on, and alpha will be much, much thinner.
Yeah, again, I think you hit on the availability, the overload too of what am I even looking at, but maybe what are the other kind of pros and cons, advantages, disadvantages of some of the, again, nascent KPIs that we're starting to build out, but just collectively on-chain versus, I think earlier we called it non-digital, traditional type of data. But just at face value, what are some of the other key differences or advantages that you kind of are looking to incorporate and develop into your strategies?
I would say the key disadvantage is that we have great online data if you can harness it, but the power of prediction is not necessarily there. What I mean is, like, investing in digital assets is so narrative driven, it almost doesn't matter. The top down matters much more than the bottoms up. So what I mean is, year to date, markets have been driven by meme coins, AI, decentralized physical infrastructure, DePIN, and two of the dogs would be like metaverse or gaming tokens. So if I notice that this game or this protocol has doubled users, it doesn't matter to price, right? So we can predict it really well, but we still can't predict the price because we don't know the market reaction function based off of that. So that's the double-edged sword. Like, we have all of this great data, but can we really use it to be productive and find the assets that are going to go up, over the next 6 months, over the next 12 months? That still remains to be seen.
Yeah, and again, I think we're starting to really paint the broad strokes of defining what makes the difference between centralized and maybe decentralized data separate and unique to their own way. I guess, Chris and Thomas, is there any, I guess, from what you've seen thus far, any high-level, maybe landmines you can say, hey, maybe try not to avoid or step on these, but just any pieces of advice from what you've seen thus far, maybe telling yourself, 6 months to a year ago, knowing what you know now?
Maybe a couple. I would say three things. One, lockup schedules are important in crypto, and it's funny. We might in some ways go back to having where everything unlocks ICO style, because then you get an open free price right then. Might go down, might go up. I mean, Solana unlocked altogether, and it actually went up because it became more decentralized. So that's one. I would say incentivization and tracking that very closely. If it has really high inflation and they're offering high APYs, that might run out, and that might be the reason that the TVL is going up very quickly. And sort of being wise to that, I think, is sort of another important metric. There's a bunch of different forms of that, but yeah, I'll mention those ones.
Thomas, maybe for the audience that doesn't know about the low float, high FTV, like what you're talking about, I agree. I think that's a really interesting point. But could you unpack that a little bit about where we are right now and why the unlocking schedule is so important?
Yeah, so you could imagine, right? Having an IPO and they only float 1% of the stock or something like that, and it's a lot of people want to own this stock, and there's a lot of assets and not much potential freely floated out there. That might cause it to go up, and sort of the early venture investors, they might hold a lot of the sort of private tokens that unlock over time on a vesting schedule. It might be a 3-year vesting schedule. And so, that 1% float might suddenly go to 50% float in a year or something. And can the market absorb, kind of a very high market cap, being a lot of tokens being dumped on the market in the course of a year or 2 years, and a firm maybe that needs to sort of show DPI to their investors, right? And so they might love the project but sort of feel obligated to sell it, and I think that creates some sort of dynamics where you don't really know if these public token prices are super real or inflated by the fact that they have a low float.
And this is obviously one of the other metrics that all the fundamental investors I follow are tracking. They're tracking the token unlock schedules and trying to understand the implications for another 5% of the float being absorbed by the market.
Exactly, and that's why I was saying we might go back to a time where you actually sort of float a huge percentage all at once, and so you don't have this sort of psychological overhang to the market that, there's going to be these unlock schedules. Can the market absorb it? But rather, okay, this is when all the tokens unlock. They all unlock together. Who's going to hold it from the VC class? Who's going to buy it from sort of the public investors who are looking at the opportunity on that basis?
And arguably, in 8 days, if we have a change of government and we have a Republican sweep, we could see this type of legislation and almost this ICO is coming back within a year. It's a possibility.
Definitely plausible. Definitely plausible. I think there's sort of many different ways to skin this cat and make it sort of free and fair and open, and that's part of the beauty of crypto, and that's what I want. So that could be one way, but there are other ways that could be good.
Maybe Niamh, you can speak a little bit about, or hopefully, what are companies like Prove AI doing to help enhance and bolster some of the trust and security of some of the data by leveraging this technology, i.e. AI?
Yeah, so it all kind of really starts with the data. So the ability to register the data sets, the models, track how they've changed over time, and that's anchored to the DLT Hedera network. But what's interesting, it's obviously a very different use case to what you guys are talking about. So, you know, when we think and talk about on-chain, it's actually just a hashing reference to prove that the data sets and the models haven't effectively been tampered with, which is really important from regulation. So we're not actually storing any like real proprietary information essentially on-chain. It's really just that reference point to prove that from a regulatory and an audit standpoint that your systems have in fact been compliant, you know, with the upcoming EU AI Act that was mentioned earlier as well. So our use case is particularly very different.
Kim, any thoughts from, I guess, what Coinbase is doing in this space as well?
Yeah, sure. So hopefully some of you have heard of Base. It's Coinbase's layer 2 blockchain. It's been pretty successful in the industry. I think we'll see a lot of growth there and other layer 2s that are coming out to really attack that scalability effort. We think that using blockchain technology is just going to greatly improve AI outputs. You know, if AI is scalable everything and blockchain is scalable truth, when you marry the two, you really just get those significantly better, more useful outputs that can be used more broadly. Yep.
And I think, Niamh, you mentioned too, just securing, verifying, making sure that, again, nothing has been tampered with, especially from an audit perspective. That's one of our non-negotiables. I mean, just kind of perceiving where the capabilities could go in terms of, okay, what else can AI potentially do to enhance our data, to enhance the trust? Just kind of throwing a curveball at you, but just open it up. Where do you kind of think, just from that perspective, coupling AI with some of the blockchain technology, what is that next box that gets unlocked, right?
I think it was mentioned again a few times today around agents and multi-agents. I think that space is very fascinating. Like right now, we're seeing more startups kind of come into the mix, focusing on that. And I think at the larger scale institutions, they're looking at it more from a theoretical standpoint. But I think when we get to a point where you have highly specialized multi-agent to agentic type behavior, that is really where blockchain can bring added value again. Because if you think about it, you know, from a wallet, a digital passport standpoint, what effectively blockchain can do there is provide that history of that AI's configuration, the data sources, any actions that have effectively been taken. And then, you know, when you look at the smart contract capability as well, you can actually program then these agents and use that technology to configure rules and also just execute various type of actions. And again, you have that tamper-resistant traceability. So you have that audit log. It's effectively an audit and reconciliation log, powerhousing these agents, which is really important if your business is going to be using these to make somewhat, you know, independent decisions down the line as well.
Kind of powerful idea, right? To let this power, you know, technology let loose on itself. But I guess just to kind of take a picture of where we are, right? We're inundated with all this information. There's questions on accuracy, questions on hygiene. You know, start talking to me, or like, I guess from your individual perspective, what does kind of tomorrow bring? Obviously, we got a lot of macro headwinds to help navigate. You mentioned a governance. There could be administrational changes. Obviously, that brings into the conversation on the regulatory framework. But I guess just from a day-to-day micro level, where are maybe your firms individually looking to leverage some of this powerful data? What are some of the known unknowns that we've kind of put together thus far? But just kind of open kind of free flow a little bit about where you guys think this is potentially heading.
I think I'm going to talk about it again from an AI mainly standpoint, but the reason why only 30% of companies are really moving from pilot to production when it comes to AI is because they're concerned around the data privacy. Risk mitigation is obviously a big thing as well, and then it's more of a people and process issue rather than a technology issue. But when we look at the data privacy piece, all of the use cases thus far, regardless of the industry, have been mainly employee assist type use cases around operational efficiency. And so when companies start to get more comfortable as to how to leverage that data, the unstructured data, and have the right guardrails, I think the types of use cases that we're going to see are going to be totally kind of different. Right now, it's really just focused on that ROI around the operational efficiency. But think about, even in a year to 2 years' time, the type of use cases that we're going to see are going to really kind of disrupt a lot of business models, in my opinion, anyway. So I'm excited for that.
Well, one thing that has interested me, on this dimension a lot is I don't know if anybody's followed this Twitter account called Truth Terminal, but Mark Andreessen, there was an AI bot that was created, sort of a chat bot, just like ChatGPT. Its creator gave it a Twitter account. Called Truth Terminal, and Mark Andreessen essentially said, "Hey, can I send you $50,000 worth of Bitcoin?" And he sent this account $50,000 worth of Bitcoin, and just to see what the AI would do with it. And the AI says the best way to make money is to create a meme coin. So he created a meme coin called 𝐏𝐀𝐍𝐄𝐋. This meme coin started maybe a month and a half ago. This sounds crazy, but this happened. $50,000. He created this meme coin called 𝐏𝐀𝐍𝐄𝐋. A month and a half later, it's 300, 400, 500, 600 million dollar market cap, where it's sort of tweeting out about this. But I guess the bigger picture here is, though, there is going to be a world here where blockchains basically are just addresses, so they're not going to be able to notice the difference unless you use something like WorldCoin, a portfolio company, which actually connects basically that account to a person. You're not going to be able to tell the difference. Blockchain isn't going to be able to tell the difference between a person and an AI, right? And then you seed that AI with money and enable them to move on chain. I think in some ways the data is going to get sort of more noisy before it gets less noisy for a period. And so I think there's going to be forces in both directions. Folks, private companies looking to clean the data, help with the foundations, compare different ecosystems, apples to apples. But then I also think that there's going to be some weirdness where, they're not just bots, but they're actually AIs that actually have accounts on chain and money on chain, and it's going to be hard to be able to tell the difference between a real person and an account. That's where things like WorldCoin come in, where they actually, link an account to a specific person. But I think that's, anyways, it might get more noisy before it gets less noisy.
Usually the case, right? Darkest before dawn. But I guess in that vein of kind of taking technology and just operationalize it, throw some tokens at it and let it do its thing. I guess specifically from Chris and Thomas, do you guys see any additional areas of alpha generation, mainly focused and I guess starting on the essence of clean data?
I think about it less in terms of clean data for me, but I would say, like, how do we unleash, I would say, private corporate data, like, on blockchains? How do we get them to put it on blockchains? I mean, a la what you were talking about and what you guys are building. But I think there's really interesting questions about if you have different privacy rules in, say, Asia, United States, and Europe, sort of how do you combine this data in such a way that you can train on it and then basically send it back out to its respective parts without sharing the data to, you know, Europe or say America, right? Because they have different privacy rules. I think there's really interesting applications using FHE and federated machine learning that enable this contribution and pooling of data, training of data, but then re-separation without sort of, you know, kind of doing away with the privacy laws.
Yeah, and I think we're starting to see a lot of those kind of use cases in practice, and with that RAG type retrieval augmented setup essentially. And because obviously within financial services, many people are experimenting on-prem as well. So you're able to have that, essentially what it is essentially having a separate database where you can have all your proprietary information and it references that. So you're, rather than necessarily always pulling information from, you know, the World Wide Web, you're actually putting it from your own live data source that you can keep up to date in real time. And so I think we're going to see more and more of those types of use cases, not just within financial services, but across these regulated industries, because they're the ones that are moving the fastest.
Guys, I'm going to start wrapping up the panel. And really, I think we've explored kind of where we are today in terms of what we're looking at, what it can potentially do in terms of help innovate, help foster growth, even help mitigate some historical and legacy risk areas. Any final thoughts from your perspective of again, how or what we should be doing as we kind of go forth, or what, even in your opinion, the next 1 to 3 years looks like as we kind of continue down this path, knowing all of this additional macro movement, but just kind of intuitive, personal next steps, in your opinion?
The final thing I would say is if you're an institutional investor, you should be considering digital assets because of the high alpha. But my takeaway is actually something Kim said. I loved it. She said, AI is scalable everything, and crypto is scalable truth. Yeah.
I would add to that, like, you need guardrails in place. Anything, you know, that scales has some level of standardization, so you can in fact scale it across the board. So I think standardization is key, having the guardrails, investing in your data. It's just super, super important. Understand where your data resides, where your IP is. And when you're looking at AI as well, start with the problem. Like, what is your main problem that you're looking to solve? Because a lot of companies are looking to experiment with the next shiny, you know, toy, but you're not going to really realize that ROI and at scale if you don't start with a real knee-jerk type problem.
I have nothing technically more to add, because again, the accountant's perspective is typically in the rearview mirror, where the scorekeepers, once it's been defined, transactions have been settled, that's when our kind of our main focus and responsibility starts to play. So I really appreciate getting some of that windshield perspectives from you guys. What are we supposed to potentially see on the outcome? And really thank you for your time today. So
Thank you.
you.
Thank you, everyone.
Thank you.